Well, good day, smart traders, and welcome to another week's market review. As always, my name is Francois. I am the senior analyst and trading expert here at Smart Online Trader, and I'm going to be taking you through the market and everything that happened during this week that has passed, as well as having a look at what trading opportunities we have available to us in the week ahead. This is not something that you want to miss. Last week, we gave 4 different trading opportunities during last week's video, which resulted in an excess of 400 pips in profits. So you would want to stick around for that. I promise it'll be worth your time. But before we get into that, 2 things. First of all, please like this video if you haven't done so yet, subscribe to our channel, and as well, comment your thoughts. We would also love to hear from you and love to hear what you think of the content that we create for you guys here at Smart Online Trader. With that being said, kindly just familiarize yourself with the risk disclosure currently on your screen, bearing in mind that everything that we are going to be sharing during this specific video is purely my opinion of the market and should not be taken as financial advice. That all being said, we had such an amazing week. Yes, we had a short week, but we still had a good one. A short week because of the fact that, well, in the US, we had Thanksgiving weekend. And this obviously created a much shorter week because of the fact that the US market was closed during this specific time. So we were unable to trade, and this created for extremely low volatility in the market when we looked at other trading setups as well. We did, however, have a fantastic spike in the market on Wednesday when this was with the FOMC meeting minutes. Now, during this meeting minutes, we actually finally got the Fed to say that they are going to start taking a more dovish approach. I mean, they have been super hawkish over the last few months. For the last 4 months straight, we saw 75 basis point increases month on month with regards to their interest rate. And even the Fed officials has now said, well, maybe enough is enough. Maybe we need to start slowing down because of the fact that, well, we also saw in this week with regards to the labor claims report. So this is, for everyone in South Africa, an easy way to understand is this is their UIF report. So those unemployment claims that they submitted during this week, we saw a massive increase. It came out at 240,000, and this was obviously way higher than the 225,000 that analysts expected. So here we can see that, yes, they have been increasing interest rates up until this point. And yes, there was also a slight increase in inflation still during this time. And yes, they were trying to get inflation under control. But when we look at interest rate increases, it normally takes a little bit of time for the effect to come into effect. Sorry for the pun, but that was the only way I can kind of get that out. So yes, now we can see that going into December, they are definitely going to take a more dovish approach. And this dovish approach will obviously mean that they are going to bump interest rates still, but they are more in the ballpark now of a 25 or 50 basis point increase, and which is far from the 75 point increase that we have seen over the last few months. So now that we've basically covered everything that happened in the US this week, let's also have a look at our economic calendar just to have a look at what happened in the rest of the world. So starting off in the beginning of the week, we had the New Zealand interest rate decision, and there we saw their actual government also taking an extremely hawkish stance, bumping their interest rate by 75 basis points, and this saw an increase from a 3.5% interest rate to a 4.25% interest rate respectively. We also saw in the latter part of the week, we had a bunch of PMI reports. There was basically like a PMI run that took place. It was literally the French PMI, the German PMI, plus the UK PMI. And then we also had the US flash PMI that also came out. So a lot of PMI reports. And this had a serious amount of mixed results between all the different countries, which did create nice volatility for us to trade and definitely created some really good trading opportunities for us in the week that has passed. Now let's have a quick look at charts. I'm going to be looking at 3 specific asset classes. So we're going to start things off with Forex, then we're going to move over to commodities, and then we're going to finish off this video looking at one of our major US indices. That being said, let's start things off. Let's have a look at what we can expect and what also happened during the last week from Euro USD. So this is AKA the fiber. So here we can see this is one of the pairs we covered last week as well. We saw that the week opened below that resistance level that we spoke about, and that resistance level was around that 1.035 level. And from there, it sold just as we expected it would do, and this generated around 90 pips of profits for us. From there, it bounced on that 8 EMA, as you can see, and it pushed up for the rest of the week, closing the week above our resistance. So now going into week ahead, that will now count as support. And here we can see that it actually nicely rejected that now support level, as well as that 8 daily EMA that we had on this specific instrument. So here we can now look for potential buying opportunities should we stay above the support level, and we can look for buying opportunities during the week ahead up to that 1.06 level. And if that resistance level can get broken, definitely further buying opportunities from there, obviously supported by the more dovish approach that the US policymakers are taking going into this week. Additionally, let's have a look at oil as well. Now, this was probably one of our biggest profit makers during this week, because we showed last week during our session that we were at a very close range just above our channel as well as that support level. And as stated, if it went all the way down, rejected, we could look for some buying opportunities. This happened exactly as expected. It literally went down to around that $77 a barrel level, and then bought all the way back up to that round about $82 a barrel level. And if you caught this trade, this would have generated in excess of 300 pips in profit. So now looking at the week ahead, if we can actually break this primary support level that has been a great support for this specific commodity over the last few weeks, then it will probably break back into that channel that we have on our screen as well. So that is if it basically closes around that $73 a barrel level. And once that happens, then we can actually start seeing a sell-off within the oil market, with it continuing down to around that $64 level. On the other side, should it now officially find support here again, we can look for some buying opportunities up to that 82 level. And if it breaks there, definitely looking for higher points on this as well. Just before we move on, just as a final footnote, should you be wondering why oil dropped so much during this week, quite simply explained, there were a few rumors going around that the OPEC plus countries, so the OPEC plus organization, has been looking at increasing the supply of oil by 500,000 barrels a day. Now, obviously, we know that if the supply of a product increases, this will automatically affect the price of the commodity. And then the more supply you have, the lower the price will become, as well as with the fact that their primary importer, which is China, is not importing as much oil as it used to due to its COVID restrictions. This has now also created fears that, there's a low demand at the moment, plus now they want to increase supply. So this has led to a decrease in the oil price. Finishing things off today, let's have a look at the S&P 500. Here we can see that the stock market had an absolutely fantastic week, ending the week in the green. The S&P 500 specifically ended the week 1.7% up. And this was obviously motivated as they were cheered on by the fact that, indicators are currently showing, as discussed earlier in this video, that the US policymakers, so the US Federal Reserve, is taking a more dovish approach with regards to their interest rate increase. And this is obviously fantastic news for our stock market. So here we can now see that this led to some great gains within this specific week. And here we can see that we also broke through that resistance level around that 4,025 level, and now closing the week at 4,026. So here we can see if we can actually stay above this resistance, which is now support. I personally think that it might dip slightly back into that zone, tap on that 8 EMA, and then reject back up. If that happens exactly like that, then we can definitely start looking for some great buying opportunities, and then looking for some, day swing trades back up to that 4,150, 4,200 level. So traders, I trust that you found this video beneficial. If you haven't done so yet, please remember to like, subscribe, and comment your thoughts on this specific video. And if you want to get in touch with us, our details are in the description below. So as always, have a fantastic week, and may the force be with you. Cheers.